Hey traders, welcome back to part 2 of the tick index. If you haven't seen part 1, I encourage you to go and check it out. This will make a lot more sense to you. But let's get straight into it. Let's get straight down to it. Let's have a look at some strategies for using the tick index. One of my very, very favorite indicators, if you can call it that. So let's change some of these line colors a bit because we're a bit crowded here, aren't we, with color. And this will highlight things a little bit better, I think. That'll do for us for now. Okay, let's make the zero line a little bit thinner, and let's make it kind of dashed so we know what's going on. Right. Okay, so intraday index only, and it's as I say, it comes from the New York Stock Exchange. Very briefly, it's the number of stocks trading on an uptick minus number of stocks trading on a downtick. It oscillates over the zero line. The zero line's in the dashed white here. In fact, you know what, let's make it red because I want it to stand out for us. But when you're trading it, you probably don't want a sea of colors all over the place. I'm not a big sea of colors fan. Okay, so let's look at this as an idea and a perspective of how to kind of get involved with this. So my take on the tick index, and again, everyone's different, add your own flavor to it. If you get an extreme move, anything above 1,000 or below minus anything above 1,000 or below minus 1,000 is an extreme reading. Generally, now you do get really volatile days where that is not the case, but generally speaking, that is an extreme reading. In other words, you've got awful lot of people who are getting aggressive on one side or the other. That generally is not sustainable. So broadly speaking, we'll look at fine-tuning this in a second. Broadly speaking, I'm looking to fade extreme moves in the tick index. That's kind of the thesis. So being very cautious in a trendy environment, but generally speaking, if we get a spike in price and we get a spike in tick towards 1,000, maybe you don't quite get there all the time, that is usually unsustainable, and I can have a little scalp to the short side to fade that move. If it's plus 1,000 or if it's to minus 1,000, I can have a little scalp to the long side for a little bounce off the lows. And we can see this example here. We had a really solid reading. Looks like we were down in sort of minus 1,200 was a big old reading to come out of nowhere. You do get those readings from time to time in really heavy days, but that's the sort of thing where you want to be fading it. You know, it's a little bit stretched, a little bit too much, and of course, you know, generally it's not sustainable. So that's ultimately what we're trying to do. We're fading extremes in tick. Another thing that we can do is we're looking to buy pullbacks in the tick. What do I mean? Let me clear this pen off and I will be a little bit clearer for you guys. Okay, so we have a drive in price, and I'll find an example of this in a second on the actual chart so we can visualize it specifically. And I've just got rid of all of my lines there, but that's fine because we want to see it in a pure naked environment. I want to see a good drive in price, pushes up, then price pulls back. The tick index is going to be pushing high, 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 high. It's going to be 500, 600, 700. You might even get 1,000. You get a pullback in price. Tick then pulls back to the zero line, and then we're looking to buy there. So we're looking to buy on the pullback to zero. It's a pullback to zero in the tick trade. In other words, extreme buying, lots of people buying on the offer. They're waiting, they're backing off. Price is unwinding a little bit. We've seen strength come in using the tick. The tick tag zero goes negative. That's when we're looking to buy, because that's when we consider the equilibrium has been met and we're now going to be pushed back with another lot of buying. Let me find an example of that for you in the S&P or the Dow. Okay guys, so I'm back and I've got a really good example of a day. Now I know I don't like to cherry pick too much on stuff, but the tick index is very, very useful when you're using it in a kind of nice choppy day. Not quite range bound day, it has got its uses there, but for the kind of stuff that we want to do as a day trader, then this is where it comes into its own. Okay, so we start off the day and we push kind of to the low side. Now the tick index at the beginning of the day, a little caveat here, you've got to be careful with it, especially on gaps, because it's going to be a little bit skewed as the NYSE starts to open stocks, because obviously the opening, if you're aware, the way the open works with the NYSE is the specialists open them and they have the print, so you have a little bit of a delay and a little bit of a mess up with your ticks, so it takes a while for it to get into gear. But just see how extreme in tick moves is pinpointing this high and low. And I've got a 1 minute chart here, I've got an S&P 500. You can see, you know, extreme in tick high. The first sort of really high tick you had after this gap down and push up was a fadeable move for a scalp pushing down to the low side. Again, you've got these kind of coinciding high sort of tick readings here that aren't struggling to get any higher in price, offering short scalps. High tick readings here, offering short scalps. You know, you've got counter trend trading, but with the ultimate sentiment, if that makes sense. So you're catching quite a lot of the moves. Now the big one, the one we're talking about, which is the initially we talked about fading the extremes in the tick, and this is kind of an example of the sort of thing we can do if we're fading extremes in ticks in the right conditions. Very, very powerful tool, very powerful indeed. Another one is to say, hey, listen, I want to get involved on momentum, but I don't want to chase the momentum. I'm not going to get involved obviously for really high tick reading or low tick reading. That's another good thing. It acts as a filter. It stops you chasing the market on an intraday basis. Let's put a trend line in here. So we've got a little uptrend here on a downtrend environment. The market kind of breaks through that. We get this low tick reading. We don't want to fade perhaps this low tick reading as we would have done if we were in a range in this uptrend, because potentially we're going to get bitten by it. So we're careful because we've broken out of a range, and I appreciate that obviously it's subjective of where you are in the day and all that kind of stuff. But the premise of this trade is that, hey, we've gone from a high tick reading to a low tick reading here, a big excursion in ticks, a big excursion in price, broken out of a trend line. Potentially now, especially as we've gapped down on the day here in this particular example, haven't really filled that gap much at all. There's the gap, haven't really got to it. The high tick readings have been sold into, indicating an exhaustion to the upside. Get a low tick reading. The first kind of counter trend move we get above the zero line on ticks, the dotted or the dashed red, should I say, is the zero line. We are selling into that. So as the ticks are pushing back up, and even better that price isn't pushing back up as well, this sort of cluster of price here, we're selling into that on that high tick reading. As soon as it crosses above zero and back below zero, that's the exact candle that we are getting short on if we were going to use it specifically to the letter. It rolls over, and what ultimate thing for us to do in ticks is to come out onto a new low of the day in tick reading. So we can have that as a setting, or okay, say we ignore the first kind of 15-20 minutes often with a tick. So the low is going to be around minus 900 on this first kind of move. If we can get below that, we're out. So we're short, we're fading it, looking to go lower, 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 and there's our final exit, which is about here. Okay, appreciate obviously it's not going to happen all the time, but that's exactly what we would do. We look for that new low in ticks, exit just based on ticks. So another thing as well is to keep us in the trade. If we've got literally the ticks are permanently sitting below zero, and we can sometimes put a moving average in where we can just eyeball and see if they're sitting most of the time below zero, and every time they poke above zero, price is getting smacked down. It's getting smacked down. Every time it goes pokes above zero, we can stay with the trade. If we're already short, there's no reason to cover the trade at this point in time. Equally, there's no reason for us to get long. We might want to get long if we see a a change in sentiment in ticks, and we'll talk about more tick examples and more tick setups and strategies in another video. If you guys like this, hit the thumbs up, and if I get some feedback on this, that you like this kind of stuff, intraday tick index strategies, then let me know, because I can go into a lot more depth about some of the strategies that I've used, and these go into a lot more depth about these as well. So comments and thumbs up or down as you prefer, but it's a really, really valuable tool. The sentiment of the ticks, this kind of the pattern of the ticks, the extreme of the ticks, pullback of the ticks, really good. If you're an intraday trader, especially, obviously it's not going to work for you if you're trading currencies. It's not going to work for you for trading commodities. It only works if you're trading S&P 500 or Dow, or if you're using one of those major US indices as a proxy for trading the DAX or FTSE, which is obviously another possibility. So very specific strategy, a very specific a kind of skill set, a very specific strategy, but works very, very well. So if you're into your intraday trading, especially the US indices, have a look at the tick index, go and check it out. And as I say, give me a thumbs up on a comment if you want me to go into more depth about the tick index and more strategies around it, because like I say, I love it. It's one of my very, very favorite tools to use. It's been very good to me, very kind to me over the years, and I can share that with you in future videos. Anyway guys, that's it for now. Run on a little bit with this one, but it's one of my best favorite tools, as I said many times before. Good trading guys, take care, speak to you soon, bye bye.